Today's video is very important because we are going to discuss a development that directly answers all those people who for the past 10 years have been saying that no major bank would ever use XRP. The update that has come forward is not just a small partnership or something limited to a Ripple product. This is specifically about XRP infrastructure, and it has completely shifted the direction of the discussion. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. This video is for educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. From the very beginning, since the XRP ledger was created and Ripple defined its mission to upgrade the traditional financial system through blockchain technology, there has been resistance. At first, people said it was simply not possible. They argued that large banks were too powerful and too entrenched to take a blockchain startup seriously. Gradually, however, documentation began to show the names of different financial institutions associated with Ripple. When that narrative weakened, the argument changed. Then people started saying that even if banks used Ripple's software, they would not use XRP. Later, when it became clearer that some institutions were integrating Ripple's solutions, the claim shifted again. It was said that this was only a buy and sell mechanism, or just the use of another product linked to the XRP ledger. But that actual XRP was not required. At every stage, the goalpost kept moving. However, the core thesis remained simple. Blockchain technology will upgrade the financial system. And the companies that make this transition easier for financial institutions will be in a strong position in the long term. Now, the recent development directly addresses this debate. A global banking giant like Deutsche Bank has officially mentioned focusing on XRP infrastructure. This is not a small regional bank. It is an institution managing assets at the trillion-dollar level. When such a large name openly refers to XRP infrastructure, it is not just an announcement, it is a signal. This development shows that blockchain adoption by financial institutions is no longer just theoretical. For a long time, there was debate about whether banks would ever use blockchain at all. Today, that question has largely been answered, but a more important question remained: if banks were to use blockchain, would they adopt existing infrastructure like the XRP ledger, or would they build their own systems? Many in the crypto industry believed that institutions such as JP Morgan and other large banks would create their own blockchains and would not need any external network. However, the practical reality is that building advanced blockchain infrastructure is not only about money, it also requires specialized talent and years of focused development. Companies like Ripple have spent years working on one specific problem: how to provide institutions with solutions for custody, liquidity, settlement, and cross-border efficiency that can integrate smoothly with their existing systems. While many crypto projects were building products for retail users, Ripple's focus remained on institutional-grade infrastructure. Banks are not interested in meme coins, NFTs, or speculative retail features. They require secure custody, regulatory alignment, fast settlement, and cost efficiency. Ripple designed its strategy to fill exactly this gap. Another important point made clear by this latest development is that the adoption model is not moving from retail users to banks. Instead, it appears that large-scale infrastructure adoption is emerging through banks themselves. In the crypto community, the idea has often been promoted that in the future, every individual will use their own wallet, make payments directly through tools like MetaMask, and operate entirely on a decentralized retail layer. However, for the average consumer, credit and debit cards are already convenient. They do not feel friction in their daily transactions. The real disruption happens at the back end, at the settlement layer, cross-border clearing, and liquidity management. These are the areas where inefficiencies and high costs have historically existed. If technology like the XRP ledger makes these processes faster and cheaper, the end user may not see much change in the interface, but the overall system efficiency improves significantly. In this context, Ripple's approach appears highly strategic. They developed institutional services that banks can directly integrate. If it were easy for banks to build their own blockchain systems, they would have done so long ago. When they collaborate with existing crypto-native infrastructure providers, it indicates that specialization truly matters. Regulatory clarity has also been a key factor. As the legal landscape has become clearer, it has become easier for institutions to publicly announce their blockchain initiatives. In the early stages, experimentation may have happened quietly, but now announcements are being made openly. This transparency can further accelerate adoption. From a broader perspective, the first revolution of the internet was about transferring information. Protocols like TCP/IP made it easy to move data globally. Now, many analysts argue that the next phase is the Internet of Value, where value and assets can move digitally and near instantly. Such a model requires an efficient settlement layer. Supporters of XRP argue that the XRP ledger is optimized for this role, offering fast, scalable, and low-cost transactions. It is also important to understand that adoption does not happen overnight. The financial system operates on a massive scale, and transitions are gradual. However, when a trillion-dollar institution publicly names a specific infrastructure, it shifts the narrative. The discussion is no longer about whether any bank will ever use it. It becomes about how quickly and at what scale adoption will occur. This does not mean that the market will move in a straight line or that there will be no risks. Every technology cycle has ups and downs. However, the concept of information asymmetry is relevant here. Those who understand the signals of back-end infrastructure development and institutional adoption can see the bigger picture earlier. By the time the broader market fully realizes it, the narrative may have already shifted. In summary, this recent announcement is not just another news headline. It represents a symbolic milestone. It shows that blockchain adoption is moving from theory to practical implementation. The skepticism that surrounded the XRP ledger for years is gradually being addressed through real-world integrations. If more institutions take similar steps in the future, the landscape of financial infrastructure could undergo significant transformation. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching.